Aoifinn Devitt, CIO at Moneta, and welcome to this Moneta Moment, where we are going to look at what has been a very testing time for real estate this year. Typically, real estate is thought of as an inflation-resilient component of a portfolio. But just how inflation-resilient has real estate been this year? If we look at this chart, we can see that in a higher inflation environment, the performance of REITs, indicated by the pink bar, tends to be higher than that of equities as well as bonds. REITs also outperform across all periods, and not so much in a lower inflation environment. However, this year has been a different story. As this chart shows, we can see that REITs have actually underperformed mainstream equity markets over the course of the year. And if we dig deeper into sector dispersion, we can see that regional malls as well as office and some industrial spaces have led this underperformance. While the woes of retail and office have been well telegraphed, the underperformance of industrial is somewhat surprising. Has this been because of overdevelopment and overinvestment in industrial to date? When it comes to residential real estate, the picture has been a little more mixed. The 30-year fixed-rate mortgage has risen dramatically this year and is at a high that has not been seen in decades. This has had a knock-on effect on existing home sales, which have fallen by close to 20% year on year. New home sales, on the other hand, have been more or less flat. It is clear that housing is becoming less affordable as mortgage rates have increased, and this is likely to have a lagging effect, but still have an effect on the residential house market. So what are our takeaways from this Moneta Moment? The world continues to grapple with high rates of inflation, the likes of which have not been seen for decades. Real estate investments tend to be a good inflation hedge in a portfolio, as the lease payments tend to be index-linked. However, in the recent past, real estate investment trusts, or publicly listed real estate, has behaved more like equities than like real estate and has not offered this kind of inflation protection. For this reason, we believe in building in a blend of private and public real estate into a portfolio so that all portfolios get a form of pure real estate exposure. This is an area we are continuing to research deeply at Moneta and will continue to recommend for use in client portfolios. I'm Aoifinn Devitt. Thank you for listening to this Moneta Moment.